all a good morning, good evening, good night, good afternoon, wherever you may be watching this transmission. Now, we got a very important article coming south of the border from us, and it's coming from the United States of America. And what is happening? Well, there's actually quite a bit that is happening. A full-blown U.S. housing market crisis is on the way. Well, we know what's happening here in the West Coast with Seattle basically being bought out by millionaires and corporate numbers buying out expensive condos and luxury properties. A lot of it comes from foreign investing, of course, overseas from China, majority. And a lot of money being parked in the West Coast because the West Coast is the gateway to Asia, to China. The gateway to the mystery of the Orient, right? And what's happened is it's led to homelessness, leaving these major cities like Seattle, Portland, Los Angeles, San Francisco, San Jose, San Diego. I can keep naming all the different counties in the area too that are leaving these cities into empty shells and making homeowners rich overnight, but on paper, but turning the cities into empty shells. And for every single homeless person, there's four empty units owned by foreign investors. Four empty units owned by foreign investors in LA County. So that's pretty harsh to hear. So what is going on? Well, there's a market crisis on the way. I would have thought, in my opinion, because I've been covering this on trends in the housing market, the whole West Coast, that you would see a mass exodus leaving, just like we don't have many cities in Canada, but people are leaving the very little cities we have to move to other ones. But you would see the West Coast of the United States, you see people migrating east, which they have, to Salt Lake City, Utah, to Arizona, moving to Nevada, moving to Texas, and moving to other states. And you would see that because they're housing migrants. They can't afford to live in their own cities they were born and raised in. So this is becoming a huge problem. But I would have thought that the migration of people moving east would have helped prop the housing market and keep it going for a while longer. But not according to these numbers that we have here. And it's actually looking a lot grim than I actually thought. I actually thought, because there's so many major cities across America, that a lot of people would have just abandoned the whole West Coast, completely abandoned, north to south. They would have blamed it on everything but foreign investing. They would have blamed it on, the tech companies. They would have blamed it on everything. And then you got tech workers, 13 of them living in a 2-bedroom apartment because they can't even afford to live on their own. You know what I'm saying? So the U.S. housing market faces big problem in the form of weak affordability. Loose lending 2020 could create a toxic situation. Remember what happened in 2007, 2008? Same thing, loose lending standards. But the problem is, in 2006, 7, and 8, a lot of foreign investing wasn't happening in California and in around that time. It started picking up around 2010, 11 when you started seeing a lot of empty homes, right? Lower credit scores pose another problem. So with especially people with lower credit scores trying to go to secondary mortgage lenders and paying a higher rate, thinking they're going to get ahead because their property might go up in price. Do your math. Do your research, guys. For the U.S. housing market, things are about to turn for the worse in 2020. There have been numerous signals that the U.S. housing market, which is nothing more than a bubble, could unravel soon. But there is one specific reason why the bubble could burst next year. So now we're looking at housing affordable areas like in Wisconsin. They're crying affordability is not there and people can afford to live. In places like Hartford, like in Connecticut, people can't afford to play like Alabama. And the median average house in some of those areas are like 140 grand. And a lot of people still can't afford to live in those places. Imagine coming to Vancouver, where the median house price in Vancouver Vancouver and surrounding area, is like $1.2 million for a teardown, like a complete teardown. So it's going to hit the U.S. hard, but it's going to be like more of a silent hit. The housing market's going to be more of a silent destruction in a way where it's going to silently do it, because other countries like Australia, New Zealand, the UK, and Canada are silently making more and more people homeless and silently taking wages are being more and more stagnant, and people can't afford to live in their own city. So they're doing this as quietly as possible. Where's the end game with it? I don't know. Home prices have been increasing at a breathtaking pace. According to data from Zillow, the median house price in the U.S. is $231,000. Guys, when I started doing trends in the housing market 3 years ago, the average U.S. home in the U.S. Benchmark price, median price, was $160,000. It has risen to $231,000, up 4.7% from last year in December 2013. The median value of a home in the U.S. was $163,000. So, of 2013. See, 1/6, that's what, see, when I was doing my videos, I was see, I'm right. See, I didn't reread this. I didn't pre-read this because I can't read. So, there you go. This means that the average value of a home in the U.S. market has gone up over 42% in the past 6 years, according to Zillow data. Here it is here. Very dangerous. $248,000. Very dangerous for the United States. There's people in Australia watching that and saying, I can't even buy a parking spot for that much money. I'm like, yeah. For comparison, the average hourly wage stood around $20. For comparison, the average hourly wage stood around $20 in 2013. The average hourly wage is approaching $24, which translates to the rise of less than 20% of the past 6 years. So again, it goes back to what I've been talking about on this channel over and over again. Wages are not keeping up with inflation. Right? Capitalism works if you make enough to live, right? Average hourly wages in the U.S. haven't kept pace with growth. Imagine places like Canada. You want to rent an apartment? Yeah, $2,400. $2,400 for this one bedroom. And that's considered affordable rent. Clearly, home prices have outpaced wage growth. Not surprisingly, housing affordability in the U.S. has dipped of late, according to the ESRI's Environmental System Research Institute. Housing Affordability Index, HAI, Americans have been stretching their budgets to buy a house. Now, we've covered what's been happening in Oregon, specifically in Oregon, in the city of Portland. We've been discussing how the average house hit the median average house hit 407,000 in Portland, and that was the tipping point. And then you've seen a mass exodus of people moving to Utah. ESRI's 2018 HAI index reading of 124 was below the prior year's reading of 129. The HAI reading for more than 100 means the average U.S. household has sufficient income to qualify for a home loan based on the median sales price. The decline in the reading means that homes are getting more expensive with household incomes aren't growing. According to a report for the Atlanta News, 38 million households in the U.S. spent over 30% of income on housing. So here is a really good article here by AJC News from Atlanta here. And they're crying, they're basically complaining that families, $3,600 wealth compared to $147,000. Hold on, let me just get into their point here. It goes back here. Let's just go back here. All right. According to the report in Atlanta, 38 million households in the U.S. spend over 30% of their income on housing. In Canada, and in the only cities we have left, people are spending 70 to 80 to 90% of their income. That's why everybody is house broke. That's why we have no consumer confidence anymore. Same thing within Australia. Australia, they're spending 70, 80% of their income on, in New Zealand's even worse, just to keep a shelter, a basic necessity. Remember we discussed Maslow's hierarchy of needs in the last couple of years on the show? There's needs and wants. People need shelter to live. If they can't have a shelter to live, then they can't consume properly. And if they can't consume properly, consumer confidence is non-existent, right? Spend over 30% of their income on housing, which can cost them burden. So 40% is a tipping point, and that's what we saw in Portland, Oregon, when we saw everybody mass exodusing and moving east, again, towards Colorado, Salt Lake City, Utah, Arizona states. The high cost of housing means that households are not able to save much after spending on other essential items. This is the reason why consumers are being stingy when it comes to spending money. This is evident by fact that retail sales in the U.S. grew just 0.2% in November, while economists were expecting 0.5% gains. Weak spending by consumers will eventually come to haunt the housing markets. But the bad news is that banks will probably try to get around this affordability crisis and eventually create a toxic scenario that will lead housing market bubble to burst. So remember, we saw those jumbo loans back in 2006, 2007. These jumbo loans, hey, we'll pay off your car, your mortgage, and all your credit card debt, and you just pay us one debt at 1%, and then after 1 year or 2 years, it changes to 7-8%. Loose lending could trigger a crash. Citing Moody's Market Watch reports that potential home buyers could get easy access to loans in order to buy expensive homes despite having weak credit, the report goes on to explain. So it goes on here, reduced home purchase affordability will continue to drive lenders to loosen credit standards to maintain volume. So remember, all the fraud they've committed in Australia, New Zealand, in Canada, and the UK, just to get loans on the books and to maintain those volumes, right? Wrote Moody's analyst Don Donnell Lee on credit rating firm's 2020 outlook. With shrinking home affordability, the underwriting quality for non-prime mortgages will weaken. An increased lender competition leads to lower standards. Yep, you're going to start seeing these jumbo loans, party loans. I even saw it was called the elephant loan. They had it advertised on telephone poles down in Miami. The elephant loan. It was like, wow. Jumbo loans, According to Deutsche Bank, credit scores of borrowers in the age range of 30 to 59 years have declined this year. The degradation of credit scores can be attributed to auto loan defaults. Yeah, so a lot of people right here, FICO scores, this is borrowers are going down, and I covered that on my channel, on the my YouTube channel here, guys. So the probability of defaults for bigger ticket item such as a home could be higher next year if banks start lending money to consumers with weak credit history. The lack of enough homes on the market and booming prices are pricing buyers out of the market. The availability of easy credit could entice consumers into buying a new house, but it remains to be seen if they will be capable enough to service their debts in light of the weak wage growth. This could eventually spell the end of the U.S. Housing market boom that has been driven by low mortgage rates and deeper affordability crisis could cause the bubble to burst. So guys, so what about in Canada, where we have very few cities to live in, but people are clawing to get in? Property taxes are going through the roof. You guys have no idea in the States what people in Canada pay for property tax. My mom, in the city she was living in, would have paid, if she kept her house, if she didn't sell it, she would have been paying almost $9,000 a year in property tax. I'm not making this up, guys. And it's getting really bad, right? With home insurances going up. I just read an article on my channel where home insurances are going up. Guys, don't forget to subscribe to my YouTube channel. I'm also on other platforms too. If one day you don't find me, you'll find me on other platforms. Here it is, guys. Like, big things happening here. Look, spiking condo insurance, leaving families bankrupt. Housing punishment. I'm discussing whether owning a home nowadays, if you didn't get in at the right time, is it considered a punishment with rising property taxes and rising insurances? Is it even worth it? Toronto taxed to death. Guys paying $200,000 property tax a year. $208,000 property tax a year. For what? I'll tell you for what. For a restaurant he owns. A one-story restaurant. You shouldn't be paying $200,000 a year in property tax and be okay with it. Private sector. Vancouver's biggest players, film animation companies, shutting down because they can't find good help, because good help can't live locally because they can't afford $4,000 a month for rent. And Home Depots across America are losing because of shoplifting, right? So there's a lot here. There's a lot here, guys. You guys should take it, look off, rip-off property tax, China's $17 billion default, Australian household recession, Alberta energy exodus, condo insurance rates go from 50 to 300%. So if people in the States think they have it bad, Edinburgh, Scotland, mass exodus. If people in the States think it's bad there, and man, you should see how overly leveraged people in Canada are. Let me know what you guys think in the comments below. Please subscribe to the channel, be part of the community, and come on our live streams twice a week. Thanks for watching.